Good morning and welcome to Bioxyne Limited's webinar today to present the company's first half FY26 results presentation. Today I have Sam Watson, Managing Director and CEO, to present. All attendees will be in listen-only mode, so if you do want to ask a question, please enter it into the Q&A panel within the Zoom function down the bottom, and we'll get to as many questions as we can. I'll now hand over to Sam to present. Sam?
Brilliant. Thank you, Mel. So we're going to run through the deck in 15 to 20 minutes. Halfway through, we're going to open up the floor to initial questions around finances and around the results. So in the first section of the deck, we'll go through the numbers, and then we'll go into some more strategic and operational detail following a short round of Q&A. So Bioxyne is a business with clear purpose and vision, redefining medicine. We are one of the largest manufacturers of special medicine products for areas of unmet clinical need. And what that means is we manufacture medicinal products where there's a therapeutic gap, where existing treatment options don't make the cut and patients aren't getting the results they need. Our current portfolio is cannabis, MDMA, and psilocybin. We're the market leader in Australia across that portfolio, and we are in multiple multi-billion-dollar-a-year markets, including chronic pain, treatment-resistant depression, PTSD, and many other conditions which are difficult to treat and very costly to treat. So you may have seen the announcements this morning. Another record period for the company. Revenue's up 150% on the prior corresponding period, $31.3 million for the half. And over 2 years, we've built a business which 2 years ago we were doing $2 million a quarter, $8 million a year. We're now approaching just shy of an $8 million a month, and I think we'll get there in the coming months. In terms of our profitability, so 8.3 million adjusted EBITDA. That includes adding back some non-cash items such as share-based payments, but an underlying net profit after tax of 7.3 million. So improving that bottom line over the previous financial year, FY25, and we'll get into that in a little bit more detail later on. The company's balance sheet remains strong, and cash on hand 7.6, in line with the end of last financial year. So we remain ready to continue investing in our growth as market demand continues to grow for our products and services. Balance sheet's also heading in the right direction as expected, for a business generating profits and cash and growing at the rate we're going. Over the half, it's been busy. We've entered 2 new markets, the UK and European cannabis markets. We see significant growth opportunity in our international export business over the coming year and years. In Australia, which is servicing all of those markets, including the Australian market, Germany, UK, we've continued to invest in scaling up our controlled drug storage capacity, our clean rooms and manufacturing operations, and our ability as a business to do that cost efficiently and rapidly has really underpinned our growth and the trajectory that we've been on. We are in a fortunate position where we are not space constrained. We have a huge amount of space on site where we can expand into, and that's been really key to driving our growth. Of course, exciting news on the psychedelics front. We manufactured and released the first batches of MDMA and psilocybin capsules during the period, and we are seeing repeat orders now on those product lines. So diving into the results, maintaining that triple-digit percentage growth rate year over year. We have back in August last year, we gave guidance of 65 to 75 million on the top line. We are maintaining that, but we are increasing our guidance on adjusted EBITDA. It was previously $11.5 million to $13.5 million for the full FY26. We are now telegraphing 16.5 to 19 million. So it's great to see the business is, getting some profitability gains. And in terms of how that compares to the previous half, it's, well, the full financial year FY25, it's a decent uplift of around 6% on the bottom line, comparing with the full financial year. In terms of comparing it to the previous half, the raw materials and consumables used may look like it is a greater percentage increase on revenue than expected, but it's in line with the full financial year. There were additional costs reflected in H2 FY25. So looking at the whole financial year FY25, we're in line. Going below that, it's great to see that commissions as a percentage of sales have decreased. And as the business scales, we see room to further sort of have cost savings there. Other gains and losses, there's a lot of expense in that line. That includes rent on 2 facilities now, the Australian facility and the UK facility, marketing, professional fees, and audit costs, listing company costs. Going into the balance sheet, apologies for the formatting issues on this. Once again, cash and cash on hand in line with the end of financial year FY25. So it's great. We've managed to maintain our cash position whilst significantly investing in growth. Important to note, inventory, strategic investment in inventory to be able to continue delivering, particularly on our white label product lines. So significant demand from our Australian clients for our procurement and white label services, where we go and purchase the raw materials as well as providing the full GMP manufacturing services and release. So big investment in inventory in the first quarter of the half, which led to a negative operating cash flow in that quarter. We said at the time we will pull that back in Q2, and we did that. We expect the full year cash flow result to be positive, and we're working towards that. So positive cash flow, profitable, and a strong growth rate. In terms of some of the lower items, liabilities, so the UK site is now attributed into a lease liability in the UK down here, and borrowings reflect the £500,000 to $1 million loan from South of Scotland Enterprise, the government-backed body in the UK that is assisting us in the setup of our UK manufacturing facilities. Steadily growing cash receipts in line with the business's growth and performance. We expect this to continue. It's a nice shaped graph with continuous sort of uplift quarter to quarter. Going into the inventory in more detail, investing in raw materials has allowed us to drive growth in our white label offering and also to service overseas markets. So raw material in Australia being packed in our facility and released for export into the UK, into Germany, but also supplying strong demand from our clients for white label products in Australia. Now, the great thing about our white label business is it's the same unit of work as contract manufacturing, but the unit economics are significantly improved. So before we get into the strategic side of things, are there any questions on the results and finances? And we can come back to finance-related Q&A at the end again as well.
Yeah, I actually do have a question. Can you clarify the outlook? Is there an increase on the previous guidance? I think you did. I think you did cover that, but maybe just deep dive that a bit.
So just to reiterate, so we haven't changed the revenue guidance. So we've maintained 65 to 75 million in revenue for the full financial year. What we have done is increased our adjusted EBITDA guidance from a range of 11.5 to 13.5 up to now 16.5 to 19 million for the full financial year. And that reflects the profitability we've seen in the first half of FY26.
With the net profit after tax up by 121%, what margin trends can be expected as you scale further?
What we're already seeing is enhanced use of our facilities here, and as we scale, we are seeing economies of scale. We're seeing cost efficiencies. We're seeing processes streamlining, and as revenue grows, I think there is room to continue increasing our bottom line and our profitability.
Thanks, Sam. So in terms of the cash flow being in the black now, if this is sustained for investment,
Sorry, Mel, actually, you cut out for a second there.
can you hear me okay?
Yeah.
Yeah. So looking at the cash flow now being in the black, if it's sustained, and we're assuming it's going to be, what does it mean for potential dividends or plans for future growth investment?
What we're seeing and what we continue to do is reinvest in our growth constantly. So our ability to expand is key to our growth strategy. Reinvesting cash into the business is generating a significant return. I think the business isn't planning to establish a dividend plan in the near future, and I think shareholders will hopefully agree that reinvesting and continuing to invest in the business's growth is a more wise use of capital, particularly looking over the next year or two when the UK facility comes online towards the end of this year, when our European plans start to really ramp up. What we've been doing is building the distribution and the sales in those markets before unraveling the longer term plan, which is to own and operate our own licenses, manufacturing, distribution in those key markets. So to replicate our success in the Australian market and take it overseas.
So you've had a record revenue recorded in the quarter, last quarter, and now this half. How sustainable is this growth, and could there be any barriers that you face?
We have a slide later on in the presentation which gives an overview of the size of the market in our key markets, so primarily Australia, Europe, and the UK. And what that slide shows is the total addressable market today. So this year is around $3.5 to $4 billion. That market is still rapidly growing. I mean, Australia, and just talking about medicinal cannabis now, because that's our primary revenue source and revenue stream. In the future, that will change as we expand our product portfolio. But looking at medicinal cannabis, we see consistent double-digit growth in Australia, year over year, 26% from the data we've seen. In the UK, that growth rate is 60 to 90%. In Germany, last year the market grew close to 80%. So we're in a big industry, a multi-billion-dollar a year industry that is growing rapidly still, and I think we're still 5+ years away from seeing the full capacity and potential of the size of the market.
One of the questions, Sam, that's coming through, it may be discussed later in the presentation. There's no GP margins outlined in the financials on this deck. Is there a reason? And how do they compare to last year?
In line with last year. I think looking at this business, looking at Bioxyne and the BLS group and assessing its profitability, gross margin for us is fully absorbed. There's a lot of indirect cost that goes into that line. I think a more accurate and reliable way to measure our profitability as a business is the EBITDA number. So what we're trying to do here is position that and present it in what we think is the cleanest and most appropriate way to demonstrate the business's underlying profitability and growth. In terms of gross margins, you can figure it out by going through, and we just don't think it's the most accurate way of reporting the profitability of the business.
We'll keep going. There's a few more questions, but we might just keep going with the rest of the deck, Sam, and then those questions may be answered.
Brilliant. So diving into the strategy, what is it in Australia? What is it internationally? We've had a very clear focus as a business. We saw a gap in the market 2 years ago for bringing manufacturing into Australia to serve the amazing Australian market with these products. We've executed that plan incredibly well in Australia, and that's hopefully apparent through the results. continuing to invest in our systems, our processes, efficiency gains, and our scale in the Australian market is key. And we are doing that. But what we have built is significant capacity to supply both the Australian and international markets. And that's just been a gradual capex over the last 2 years. In terms of where we saw the market going, so if I look back 12 months ago, we saw pastilles potentially being 20% plus of Australian prescriptions by 2030. We see it heading there this year. So as a dose form, we pioneered that market in Australia. We've helped build that category. And the growth rate has been more substantial and faster than we thought it would be. But pastilles are less than 30% of our revenues in Australia. And it's great to look at other product categories that we have and to see where we can start winning contracts and growing both our revenue and EBITDA in those other product lines. So in terms of where we're at, winning new contracts with new clients, and we've signed some great deals over the last or during the period with companies like Cureleaf, one of the largest medicinal cannabis businesses in the world, and Remidose for new markets like Latin America, Costa Rica. So continuing to find new contract wins, growing the percentage of our clients on a white label, working with us to do white label manufacturing, which has higher unit economics. And then the overseas strategy, which is leveraging the Australian infrastructure and capacity. So in terms of sort of strategy as a business, we have three things here: manufacturing dominance, to be the dominant manufacturer and supplier of these products in our key markets, Australia, the UK, and Europe, with a primary focus on Germany for the next 12 months. So being that go-to manufacturer and distributor. The second line is building brand equity with patients. And this is not something that we've pushed or spent any marketing to promote, but the Dr. Watson brand has a long history, and it's our registered trademark brand in the UK, Japan, Australia, New Zealand, and soon in Europe as well. We are slowly building the distribution of the brand, both in Australia and overseas. But how we've positioned it, it's a higher price point. It's a friendly brand for our clients to put alongside their own brands that we also manufacture in their formulary, so that patients have a wider range of choice and prescribers also have wider scope. Research and development. We are a medicines innovator. Pastilles is an example of that. The intellectual property we have in that product category is very valuable. And as we grow, we are continuing to innovate in terms of product, in terms of formulations, and in terms of potentially new compounds and new controlled substances that we can bring on the license and manufacture. So the future of the business is, we've got a long way to continue growing into our existing product categories, but the scope is to expand those down the line. So coming onto the capacity slide. So over the last 6 months, in the period, we increased our ability to supply finished medicinal products. We haven't actually given an indication of how many products we can make per year, but across the portfolio, we can make around 8.2 million finished medicines per year. And the average over the last quarter, so second quarter of FY26, we were delivering 240,000 units, so individual patient-ready prescribed medicines per month in that quarter. So there's a lot of product coming from our Australian facility, and we've also got the capacity to seriously grow our top line with that capacity. In terms of the number of SKUs that we manufacture, that's close to 900. That's different individual products, and breaking it down into the product categories. This is reflects that most of the business's revenues at the moment come from medicinal cannabis. Big increase in cannabis flower, which is the biggest category in the medicinal cannabis market. Most prescriptions are for flower products. So we've ramped up our ability to manufacture and supply cannabis. And a lot of this is, so that ability to supply more finished flower units goes hand in hand with both the demand that we're seeing locally as well as overseas from our export markets. And yeah, so a significant portion of our capacity increases is in white label flower products. The international strategy is, oh, slide's gone a bit funny, but Germany and the UK are key. It's only recently that we've entered those markets, but we've seen some significant early wins. We have a fantastic partner on the ground in Germany, and we've been assessing the European opportunity for the last year or so. We've put the plans in place to get our Czech facility licensed and operating. However, we've put that on hold to assess a local opportunity in Germany, which would make a little bit more sense in terms of scalability and proximity to our customers. Germany is the heart of the European medicinal cannabis market. There are positive regulatory developments on the horizon in France, Spain, and some other EU countries. Poland is a big opportunity. Malta slightly smaller, but we're seeing very positive developments in the wider European markets. So we're keeping an eye on those. In terms of the UK, we have started building the clean rooms and controlled drug storage in the UK. We were up on site a couple of weeks ago. Plans are all finalized, and we expect to hopefully have some good news on that come June, so a few months from now. Licensing and full accreditation may take us through till the end of this year, so December. But we see the UK as a significant opportunity, and the market is several years behind where Australia is. But what we see is the opportunity to step in and help drive growth in that market, applying what we've learned in Australia. As we're building our European presence, the listing in Germany under ticker PR8, we're listed in Frankfurt, Stuttgart, and I believe Munich. So there's now 3 exchanges where we're available for trading. And we're enhancing our presence, right? So building our presence in Europe with local partners and having some visibility with the local investment community is a positive. Of course, the Latin America deal, we're a first mover in those markets. We have signed an agreement with a local partner, and it's a case of we're going to build the distribution, see how it goes, rely on the Australian scale, exporting product into those markets, and then potentially assess the opportunity to set up manufacturing locally. Going into market size, once again, just focusing on medicinal cannabis because it is, at the moment, the largest contributor to our revenue and our growth. The Australian market is still growing and has a lot further to grow, I believe, over the coming several years. And what we broke this down into is sort of average annual spend per patient. The patient numbers here may seem lower than what we've previously provided, but we think this is a more accurate way of demonstrating regular repeat patients, so patients who receive products monthly or perhaps every 2 months, rather than looking at the total number of patients in the market. So our research tells us this year a $3.5 billion addressable market and growing. Sorry, one more slide. So in terms of strategy, once again, so we serve a market where there is unmet clinical need. These are investigational medicines, but we look for opportunities where we can commercialize those products immediately. And on the human side, we're helping people get back to a state of normal living, or where existing and other treatment options have failed to deliver adequate results. And it's a big market. If you look at depression, multi-billion-dollar a year, or tens and tens of billions of dollars a year in cost, incredibly difficult condition to treat. More than 30% of people don't respond to existing treatment options. And that's where a product like psilocybin may be able to help and get people back to, a normal, happy state of living. So the importance for our strategy, we're focusing very much on finished product manufacturing. We want to be close to our clients. So building what we've built in Australia in the key markets around the world that we operate in, is the plan, and we have a lot more room to grow. So just reconfirming, we're keeping revenue guidance as it was, but we're upgrading our adjusted EBITDA guidance significantly to $16.5 to $19 million. The capital structure of the company, so directors have around 31%, our top 20 hold around 70%. I think we have close to 2,000 shareholders now, which is great. And the market cap of the business is close to 120 million. I think, Mel, we can probably open up to Q&A.
We certainly can.
Thank
I've
you.
got quite a few questions coming through, and some really good ones. John Sheffield has asked, I note share market today values Ventura Health, who was a previous market leader at approximately 30 mil, down from 100 mil plus, while you are now valued at over 110 mil. Are there takeover opportunities available down the track?
It's a good question. It's so 4 years ago, when we just got started in Australia, Vitura were actually part of the reason I was so interested in the Australian market. They were a big market cap and profitable and had a great business model. I think they may have lost their way a little bit, but just looking at the financials, but it's a completely different business to what we do. They are more in the business of distribution to pharmacy, so wholesale distribution to pharmacy, managing other people's products and distributing to pharmacy and clinics. It's an area of the industry where initially we actually thought we would try and get into until we saw the opportunity in manufacturing. I think at this point in time, as a business, there's a lot more room for us to grow into our existing operating model. So we aren't anywhere near saturation and the size of a business that we could be in our existing focus. So before we start thinking about vertical integration and consolidation, I think we need to, spend the next 12 months really growing into ourselves and assessing the international opportunities. But we're very focused on our strategic mission.
This probably flows really nicely into the next question. Why do companies like Curaleaf choose to contract manufacture from Bioxyne when they could possibly do it themselves?
They can in the markets where they have the licenses to do that, but in the Australian market, most companies don't have manufacturing. So we're one of the few options that, and we are the best option when it comes to, GMP manufacturing services in Australia. We've become the go-to. And, the fact that these huge international, multi-billion dollar publicly listed cannabis companies are trusting us with their market entry and manufacturing it's a huge compliment to us as a business, but it demonstrates the strength of our operations, the strength of our quality team and systems, our manufacturing, our ability to reliably manufacture, turn around, and release products quickly and consistently.
James Tracy from Blue Ocean Equities has a question. Can you please comment on your current market share in Germany? In fact, Sam, there's a few questions about Germany from across the board. So maybe just touch on that space a bit more.
Yeah, so in terms of tonnage, so we put the German market's different to the Australian market. So in Germany, cannabis flower is 95% of all cannabis prescriptions. Dronabinol, which is a THC extract, is the other 5%-ish. In terms of the sort of the German market size, 2025, we estimated it around 140 tons of flower. I think over the last, in the half, we delivered, I believe it was 1.6 tons to Germany. So that initial entry point would probably place it, around 1% to 2%. But we'll see. I think we see increased demand, much greater demand than what we've already seen. It's building in Germany, and I think Germany is going to be a big part of the story and a big part of our growth over the next 6, 12, 24 months.
In terms of the psychedelic segment, obviously the medicinal cannabis is the 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 main part of the business at the moment. But the psychedelics, the psilocybin, real potential in that space. You know, it's so new, but what's the potential there?
It's huge potential. I think it's potentially bigger than cannabis. It's going to need some time to get there. And the reason I say that is you look at mental health conditions, and the stickiness of those diseases, particularly the resistance to existing treatment options for PTSD and depression, treatment resistant depression, um, statistically very high. So 30% plus of people with depression are treatment resistant. And it's a huge, huge market. Now, the opportunity is in Australia, we're in one of the most progressive regulatory environments for those medicines, where they've been rescheduled to allow psychiatrists to actually write prescriptions outside of clinical trials. And that's a market that we see growing rapidly over the coming 12 months. But it's early days. And I think, the opportunity is probably the next 5 years. Perhaps it can be as big as cannabis.
I've got a question asking about competing in the USA. Would Bioxyne compete if the regulatory changes occurred?
So I imagine what that question is referring to is the regulatory changes being a rescheduling that passes through the Congress, federally rescheduling it as a medicinal product, thereby allowing us to export to the USA. If that were to happen, we would be massively competitive compared to US manufacturers. We would be significantly further ahead. Because of the fragmented nature of the United States, you're essentially dealing with 51 countries with their own sort of independent regulations. They can't currently import, export. The local pricing is significantly higher, and I think local operators in the US are really held back by their tax situation. So if that was to open up and we could export to the US, that would be a huge opportunity for us, just from Australia.
Mm.
So we're hoping at some point soon that happens.
Sam, a question from Paul O'Grady. What's the strategy for the Meadowbrook site now the growth rate is continuing? Is there potential for expansion, relocation, or alternative sites?
Thanks, Paul. We're locked in here for a 5+5 year lease, which is great. And there is significant room for expansion. I think, Paul, you've seen the site. We've got 10,000 square meters licensed. We're currently covering probably 25% of it. And you can see the total estimated revenue capacity at this site. It's significant. So we do have significant room to continue growing into our current site. We're not constrained by space. And I think what we've demonstrated over the last 2 years is the ability to efficiently, or cost efficiently, and very rapidly scale up our manufacturing. So during the period, we added another 4 clean rooms. It took us 3 months to build, set up, validate. They're already up and running. So I was down here in December, and they weren't even finished. They were half built. Now they're up and running and supplying product.
Jono Howe has asked, the MDMA lines coming along, is the approving of the dispensing of this different in each state? Is it just Victoria? Do you see more demand with more of these research bodies signing up?
We see significant demand. And we're also seeing significant demand from overseas trials. So I've been in calls over the last 3 or 4 months with universities in the UK, in France, in Holland, Switzerland. So on the clinical trial side, I think there's a tremendous opportunity for us to leverage our GMP manufacturing for those capsules to supply consistent, GMP quality product into those trials. But then locally in Australia, what we see is the authorized prescriber program, where there are psychedelic assisted therapy clinics popping up around the country. We see that as a incredibly exciting high growth opportunity, which will play out over the next 12 to 24 months. And we're seeing repeat orders now on those product lines.
I think we'll wrap it up there, Sam. There's a few more questions, but we can get to those via email and respond directly to the group. Thank you so much for everybody for joining us today. Sam, congratulations on the results. I know how hard you and Jason and the team work, so well done. And yeah, really looking forward to seeing what's ahead for the rest of the year.
The team make my job easy.
They do.
Brilliant.
Thank you so
Thank you
much.
very much. Thanks for joining.